Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio. "26 years of CNBC-TV18.
The Nikkei is trading below the flat line, currently down by 0.25%.
It's different. We actually have risks to both. And I think we're doing the best we can for people.
Support stands at 58,600.
We have to be very careful with the narrative and what we digest. There's so much of information flowing around.
30 points on the Nifty now and about 58,980 on the Nifty Bank.
Right now, there are concerns, I understand. But I think as the stores mature, profitability is going to improve.
The company is looking at expanding the capacity of NINL by around 4.8 million tons.
The hybrids doing slightly better than the equity categories has ensured that, there is also incremental inflows that is happening.
So from a physical, the whole world has transited to paper wealth actually. And now paper is becoming actually digital wealth.
The Nifty move higher right now, up 60 points above the 25,800 mark. White House may still be pushing for more agri-exports as part of the deal. And this is likely to complicate talks which are in the final phase.
Even the small cap index is up 0.6%, outperforming the benchmark indices.
Finally, some signs of recovery on Dalal Street. The Nifty's crossed 25,900 after hitting a low of sub 25,700. The morning was also subdued. It's just after 11 o'clock, the screen has turned decisively greener, and it's good to see the broader markets outperform. Mid-cap index is up more than 500 points with a positive advance decline ratio. Hi, guys.
Hi, afternoon, guys. I was looking at the total FPI numbers for the year, right? So $18 billion of selling. Now that Nigel's also counting down to the end of the year and 7 trading sessions or 7 working days left for Nigel, maybe FPIs, we can only hope that they go on their December holidays, Christmas holidays. The selling stops and we can get some nice looking levels on the screen. But for today, definitely. I mean, after yesterday's disappointment, today is a good day.
I'll tell you what, and actually we'll address the rupee in just a bit. And normally we have seen when the rupee slips, the markets have got jittery. Now it appears this time around at least that news is digested, and maybe there are some positives as well that you're looking at with regard to the rupee fall. Because the rupee actually has slipped in the last hour or so, and the markets are at the high point of the day. And another stock that we'll be tracking during the course of the next 60 minutes is obviously Interglobe Aviation. There's a knee-jerk reaction on that one because of the compensation they'll have to pay. But we'll keep an eye on that one. And Vodafone Idea, Rima, that 11 rupees is where they came and they raised money from the market. The last few times it's gone to 11 rupees, that level has been rejected. Currently, it's holding about there. I think the close of today will be important if it can conquer that 11 rupee mark, because a lot of supply was expected at around 11 rupees.
And also today, we've sort of decoupled from Asia. Asia is actually in the red. Nikkei is down about 1% as it closed up. The Taiwanese markets were down more than 1.25%. So that's looking good. And there is no single sector which is in the red. Gains are dominated by capital marketplace. So across the board, strong strength seen there. Auto, pharma is surging. But it's quite a broad-based up move. But 1 hour to go, and our viewers are watching Closing Bell.
No, absolutely. And by the way, just mentioning that this whole Oracle business has really spooked Wall Street. Futures are down between 1% to more than 1% on indices like the NASDAQ. So let's see how that plays out. And typically, we've seen that in the past. It could be a very short-term sentiment-driven thing. But when there's a big sell-off in global markets because of AI, tactically, maybe just for a day or so, India does tend to see some flows. We will see if that indeed plays out as we go along. But lots lined up on the show as we promised you. So it's an action-packed final hour that's coming up. We have plenty of stocks to go over and, of course, all of the day's trading action as well. So here's the lineup. We'll be tracking the recovery. The markets come back to 25,900. We'll, of course, get you all the trading calls as well, track the big movers, and then track the big move on the rupee. It again hit fresh all-time lows, now getting closer to the 90.50 mark versus the USD. So what is the market bracing for? What's the chatter in dealing rooms? We'll talk about that. And then, of course, we look at the US Biosecure Act, and what it means for CDMO players here. That's actually seen this entire sector. It's seen stocks spike higher, likes of Divi's and Syngene. Brokerage firm Macquarie has reiterated an outperform stance on the sector because of the US regulations, and we'll do the analysis on that in just a bit. Tata Steel has unveiled an extensive capex strategy, and there's an MOU that's been inked with Lloyd Metals as well, so we'll analyze all of this as we go along. But first up, the trades for the last hour. We have Mitesh joining in. Mitesh, good afternoon. What are the calls now?
Good afternoon. Well, I think, on the index, we said that in case, we don't break 25,700, 720, which is the gap area, I think we'll bounce back to about 25,950 or so. Only, I think, once we start closing about that, and we are very close to that level, then I think, the weakness will kind of be taken care of at the ebb, and, you might see the range-bound markets come back into picture. So for the timing, we're watching 25,950 closing, but right now I have one buy and one sell call. PB Fintech or Policy Bazaar, that's on the buying side. Buy here with a stop at about 1914 for targets of 1980. And ONGC is a sell with a stop at 242.5 for targets of 232.
Thank you very much for that. The other big story is the Indian rupee continues to plummet, hitting fresh all-time lows. 90.47 is the record low, beating last week's low of 90.42. Dealers attributed to more hedging demand by importers on signs that the trade deal may take more time, and hence rupee recovery is unlikely. Lata joins in with what she's learned. Lata?
Yes, the previous low of the rupee of 90.42 reached on December 4th has been taken, and that happened actually around midday. We went to 90.48, and thereafter it's kind of remained at all-time low levels. The fall was surprising because today would have been a day when you would have expected the rupee to do well, because the dollar index has fallen, and so has crude. Crude is at 62, dollar index at 98. One would have thought this may not be the day when it will set a fresh all-time low. So this is a bit of a surprise. With stock markets doing well, the surprise only increases because one would assume that it is FPIs who are buying. Dealers claim it can also be importers who are buying dollars, because now the street is almost veering over to a one-side view of the currency that it is headed towards 91. There are no two sides. Initially, when 90 crossed, the expectation was, that perhaps the Reserve Bank will block it there. Now the Reserve Bank clearly is not blocking any level. That the market is very clear. It's just maybe smoothening sharp volatilities by supplying. The cue today apparently came from the NDF market, that is the offshore market, where the rupee already was showing signs of weakness, and that's getting translated over here. The feeling in the market now is that the Reserve Bank is allowing this both in onshore and offshore markets, because that seems to be a natural way to correct any trade deficit. Exports becoming cheaper because of the cheaper rupee, and imports becoming dearer. You can see all steel companies, etc., are rising, partly because now the competition from China or competition from elsewhere becomes a little more expensive. There's more breathing space for Indian domestic makers. And finally, the statements that came from Delhi, the commerce ministers, the CEAs, the chief economic advisor, all of them indicating, saying that we can't rush into a deal is what the commerce minister approximately said. We have to look at every point. Seems to give the impression that the deal is not tomorrow or end of the year or something. It seems to be a distance away. People are speaking of March now. So that's again led to this one-sided view that, the rupee there is more declines. Let's not be surprised.
Okay, all right. Got that, Lata. Maybe you want to stay on and take some questions as well. We have Dheeraj Janim, economist and FX strategist at ANZ Research, joining in. Dheeraj, thanks so much. Let's just take up those points. I think what Lata said made so much sense, that the market has become completely one-sided now. There's no one calling for the other end at all. So it kind of then starts becoming a self-fulfilling prophecy, doesn't it? Can you tell us what you've noted in the market today, and whether you're expecting lower levels even before the year ends?
Right. So thank you for having me on the show. Look, I completely agree that the expectations about USD INR are a bit one-sided right now. So once we had crossed the 90 level, I think some pain was taken out of the markets because some positions were booked. But I think fresh importer hedging demand could be coming in, because most people do expect that trade deal more or less remains elusive. The comments from the CEA, etc., do not indicate any clarity that it's happening any time near in the near future. So I do think that most people are positioning on a one-sided manner as far as USD-INR is concerned. Yeah.
Okay. So do you see lower levels, Dheeraj?
Look, I think the rupee weakness is further to go. As long as high tariffs stay in India's economic configuration, we are projecting rupee at 91.5 at the end of next fiscal year. But given the kind of momentum we have seen, those levels can be attained much sooner than we are currently projecting.
What about next year? We normally see fresh allocations when the year begins, and the FPIs will be now staring at a far cheaper rupee and stocks that have not run up compared to other comparable geographies. As well, we always know that the Jan-Feb-March quarter is a time when trade account also posts a surplus. So is January the new hope that the rupee will turn?
I would assume so. Seasonality could play out in Q1 of 2026. In fact, we have put Q1 forecasts at 90, which is appreciated from the current levels. But, the understanding is that fundamentally we are looking at a weaker rupee in the medium term as long as tariffs are there in the picture. But, of course, point taken, seasonality could play out.
Dheeraj, the other thing that I pick up from FPIs, or those who talk to FPIs, really, the interlocutors, is that now the Indian capital gains tax and withholding tax is hurting. Time was when returns from India was so high that these taxes could be paid. Now foreigners are losing on the currency and the stock markets have not really given gains in most counters. So the tax is a pain point. Is that a hope that will get addressed in the budget? Is there even a chatter with people you speak with?
I really don't think so, Lata. So if you look at the government's tax situation overall, it's not looking great. In fact, to me, there's a bit of a fiscal strain in the system, and the recent tax relief, which were, so to speak, support demand at large, would of course have eaten some fiscal capacity for the government. I don't think in the upcoming budget there would be space to do a lot more tax relaxation of any nature. Forget the capital gains tax or withholding tax for that matter.
Okay, all right, Dheeraj, we'll leave it on that note. So, not much positivity coming out of that conversation. I'll tell you what, Lata, speaking of FPIs returning, I was having this conversation just a while back on the Global Reset, our CNBC-TV18 Prime show with Adrian Lim, with Adrian Moat. I asked him the same question. Are they coming back? And he said, you know what, even after the run-up in South Korea, those chip stocks are still looking good. The valuations are good. I have very little reason to allocate to India, given the current return profile.
They've posted 32% gains, Korea. Taiwan is posted 77% gains.
Yeah, the Kospi is up 70% this year.
Yeah, Kospi is up 70%.
But till September, they outperformed even more. In the fourth quarter, that is from October 1st till now, India is pretty okay. 2.5% up approximately, which is
talk of optimism.
We need it. We need it.
And IT from the October lows is up 12%. Okay.
15%.
Yeah, depends. 15%. Depends, yeah.
No, you're right that those two counters have to do well. IT because they're export earnings and they don't have any import buying. Some of the exporters are value adding. So they're also paying more for raw material. IT is a total gainer when the rupee weakens, and likewise people like your companies, steel. The competition is more expensive.
Lata, just to add one point with regard to steel, that safeguard duty hasn't come. The rupee has weakened a little bit. You have JSW Steel that's gone in there and done a deal with JFE. $2 billion is going to come in there, and Tata Steel is going to commit a big capex. You don't want to give me the safeguard duty. This is what I've done. Now do you want to give it to me? I think, they put it out there that we are making a strong pitch. We are putting down the big money. Give us that safeguard duty, 10, 11, 12% that you promised. I think the pitch has become stronger according to, just looking at the kind of news flow that I've seen.
But this rupee is hurting some of these oil refiners. Look at an MRPL, a Chennai Petro. So otherwise the market is green, but these stocks are down close to about 2.5%. In fact, let's get in Deven Choksi, MD of DR Choksi Finserv Private Limited on the show. Deven, is there any rupee play on the way up, on the way down, particularly for oil marketing companies or oil refiners? Aviation is otherwise hit, but, on account of the rupee depreciation. But that's another story because there are other factors which are hurting Interglobe Aviation. But what about in the oil and gas complex?
Yeah, Rima, good afternoon. Well, I think my understanding is, I think you need to segregate the players, the OMCs and the refiners, I think versus what Reliance is doing. Reliance possibly is doing a segregation of, I think, the domestic refinery business as well as, I think, the export business. Given the sanction, probably, I think they are segregating the export refinery business, I think, without Russian crude, and I think the domestic one with Russian crude. So from that perspective, I guess I think the Reliance probably is playing among the best, among the lot, I think the smartest in my viewpoint. I think so they are unlikely to get anywhere affected beyond the point. On the other side, I believe that I think that domestic refiners, the public sector under companies, OMCs and refining companies, I guess I think there is slight amount of vulnerability. At this point of time, not completely sure, because I think you also have the passover mechanism when the crude oil prices and the import bill fluctuates. So from that perspective, I don't think that I think too much of adversity for the time being. But maybe if it sustains for a longer period of time, one will have to examine this particular case once again. As of now, no view on the PSU, refiners and OMCs.
And just to complete the IT argument, or the rupee argument, Devin, hi, afternoon. Will you look at buying IT stocks at all? Because of the rupee tailwind and they're so beaten down, under-owned, any reason to look at IT?
Yes, Sylvie, good afternoon. Well, I think all this year, I think one understanding has come out very clear to us that whenever the currency is depreciated, I think the maximum advantage would reach out to the companies for a quarter, or at the best, I think the 2 quarters. In this case, I don't think that I think beyond that, I think they are likely to see the advantage. But I think you don't buy a business just because I think in 1 quarter you're likely to see higher amount of profitability because of the rupee depreciation. Eventually, I think it gets evened out with the currency movement. And as such, I think we are not fully clear as to where the rupee is likely to get settled down to. I think it has escalated to 90 levels plus, I think, in a very short time. Quite possible that I think with some kind of favorable news coming on the trade agreement, it might probably once again go back under 90. So one will have to wait and see how exactly this plays out. But for that reason, we don't buy IT. We believe that the IT companies are looking inherently strong given the kind of execution that they are doing, and maybe from the valuation perspective at this point of time.
Okay, let's turn our attention from IT to pharma. The U.S. House has passed the National Defense Authorization Act, moving the Biosecure Act, which restricts biotech contracts to countries like China. Local contract drug makers see this as a positive step that can actually shift demand to India, manufacturing to India. Ekta joins in to tell us more. Ekta?
Well, yes, the news is that the U.S. House of Representatives has passed the National Defense Authorization Act, and the U.S. Biosecure Act has been incorporated into the final version, which is passed by the House. Remember that the Senate had previously approved the Biosecure Act as a part of the NDAA, which is basically the National Defense Authorization Act, on October 9, 2025. The bill will now proceed to the Senate for consideration, and the vote is expected next week. Now, Macquarie has written on the Indian CDMO opportunity. According to them, the US Biosecure Act is likely to be enacted into law by end of 2025. The Indian CDMO market, according to Macquarie, is worth around $7 billion. It could grow to around $20 billion by the end of this decade. Incremental projects resulting from the Biosecure Act are expected to contribute to revenue according to Macquarie and earnings after a lag of around 12 to 24 months. They reiterate and outperform on the CDMO coverage companies. They prefer stocks such as Divi's and Syngene. Now, SciLife has indicated that CDMOs who were waiting final confirmation will now start acting on this Biosecure Act. They themselves are engaged in strategic conversations, and meaningful numbers will take some time, however, to come into play.
Thanks a lot for that, Ekta. Well, Devin, what do you make of this news piece, and what do you like from the pharma pack?
And I think we have been clear about the possibilities and the prospects for Indian CDMO companies, the API companies who are the suppliers or intermediaries. So probably I think the time is coming out better to them. Of course, on one side, I think under this act, they are restricting Chinese companies from further getting entry into US. Other side, I think the Indian companies which have actually created the base and also I think won the contracts to supply to the OEMs. I believe that I think they are in a better position. The likes of Divi's, the likes of Laurus, I think were built the additional capacity to cater to the demand or the orders I think which they have received from their principal companies. I believe I think they are relatively in a better position. Though one can argue that I think the stocks are adequately priced today, and which I do agree. However, I think market correction is the best time opportunity to buy into such kind of companies. But prospect looks clear and stronger to us as far as I think the CDMO API business is concerned.
Okay, all right. Deven, I wanted your view on the metals pack, but first let's tell our viewers, just refresh the memory with regard to Tata Steel. Finally, they went ahead and announced a major capex program, and the street is waiting clarity now with regard to timelines as well as execution. That's likely to come about later this evening, and the street will be waiting by, because if that capex is not too big, then they'll be happy. But if it's extremely big, then again, the street will get a little bit cautious on the debt front. Let's run you through what we know till now. First up, the company will be expanding the NINL capacity by around 4.8 million tons. Remember, currently it's only 1 million tons. It'll go to around 5.8 million tons. And they mentioned it numerous times in the past. It has the potential to go to 10 million tons odd. So that's point number one. Point number two, they're planning on setting up a 2.5 million ton thin slab caster as well as rolling facility in Odisha. Equivalent amount of finished steel as well will be added. That's 2.5 million odd. Point number three, the company is looking at setting up, expanding its downstream footprint in Maharashtra itself with a 700,000 plant that will be, hot rolled galvanizing line as well. Cold roll complex basically in Maharashtra. Point number four, they have signed up a strategic partnership with Lloyd Metals and Energy across mining, logistics, including slurry pipelines, pelletization as well as steel making in Maharashtra. The plan is also talking about a greenfield plant of around 6 million odd, which will come up in 2 phases. And separately, they acquired 50% in Triveni Pellets in Odisha for around 630 crores. The remaining 49.9% is held by Lloyds Metal. Now, remember, this will assure them with regard to raw material supply and could effectively, result in some cost saving on that 4 million ton of pellets of roughly around 500 to around 1,000 rupees per ton. The collaboration, while it provides Tata Steel with presence in West India, remember till now, on the west side, you only had JSW Steel. Now, suddenly, Tata Steel is coming actually into JSW Steel's terrain. So, interesting times. And the final point that they said is they will be beginning work on a 1 million ton Hisarna-based facility in Jamshedpur. That's basically a technology that uses low-grade iron ore, eliminates coke usage, as well as incorporates slag steel. They're already doing this in Netherlands. They're looking to do it here as well. Net, positive. It'll address the growth concerns. It'll address the market share, in India as well. But the debt number and the capex is still due. For the time being, the street likes it. Deven, quick word on Tata Steel?
Well, I think the numbers appear quite convincing and aggressive at the same time. I believe that the kind of capacity build-up that they would be doing in NINL, I think will definitely yield better results going forward. But generally seen that the metal commodity companies, when they are in expansion mode, I think the stock markets do not favor them enough. And that is a concern. But otherwise, if you are looking at, the turnaround cycle in the steel, which we are considering very systematically, we believe that the things could look up much better now onwards, save and except on the minus the expansion part, which may not go immediately well with the balance sheet. But otherwise, the company looks quite convincingly positioned in our viewpoint.
Okay, all right, Deven. We will leave it on that note for today. Thank you very much for joining in. Good to get all of that perspective from you. Okay, going back to what has been the biggest story over the last 1 week or so, when we're talking about Interglobe Aviation. Pull up the stock. It's down about 0.5% right now and down a good 23% from the peak. So here is the latest. Interglobe Aviation is going to be paying compensation to all the passengers who were stranded as a result of those massive flight cancellations. Now, what is the kind of compensation? What are the numbers looking like? Let's go across to Madiha for the basic math. Madiha, what have you picked up so far?
Well, Indigo has finally announced a compensation package for passengers left stranded during the airline's massive operational collapse earlier this month. According to Indigo, customers who were stranded for long hours on December 3rd, 4th and 5th, the 3 days that were severely impacting passengers, especially at severely congested airports, will now receive travel vouchers worth 10,000 rupees, and these vouchers will be valid for the next 12 months wherever they want to travel. And Indigo says this is specifically for passengers who were severely impacted. In addition, Indigo will also pay 5,000 to 10,000 rupees as compensation depending on the block time of the flight to passengers whose flights were cancelled within 24 hours of the departure. This part is in line with DGCA rules and is separate from the travel vouchers that Indigo is offering to those passengers. Now, let's break down the rough math that we have. Indigo operates about 2,200 flights per day, and on December 3rd, the airline cancelled roughly 1,000 flights, again 1,000 flights on December 4th, and 1,500 flights on December 5th. That's a total of 3,500 cancelled flights in just 3 days. And if we consider an average 150 passengers per flight, that's 150 multiplied by 3,500 flights. That equals to 5,25,000 passengers affected during the peak meltdown window. And if Indigo gives each of these passengers a 10,000 rupee travel voucher, the payout works out to 5,25,000 into 10,000, which is 525 crore rupees. And this 525 crore rupees is over and above the government mandated DGCA compensation, which itself ranges from 5,000 to 10,000 rupees per passenger and depends on flight duration. Now, we have already calculated earlier that if DGCA compensation applies across all 9 lakh affected passengers, that is a rough calculation that we had, Indigo's liability on that front alone could be as high as 900 crore rupees. So what we are looking at this is Indigo's voluntary vouchers could cost the airline over 500 crores and the DGCA mandated payout, depending on the regulator's findings, could run into hundreds or even thousands of crores more.
Madiha, I remember a couple of days back, Indigo had confirmed that they've already given payouts of about 827 crore in terms of refund.
That was refunds, and refunds are different than cancellation. So you are eligible, if your flight is cancelled, you're eligible for refunds as well as compensation.
Okay, so there's the flight refund which they've paid.
Which is 827 crore.
And they are compensated for the inconvenience that they've faced.
Which is the DGCA mandated compensation.
But this,
and then this is over and above.
Over and above the DGCA mandated compensation. So this is a special package that they have announced. We could also see Indigo probably reducing airfares going forward to kind of improve customer sentiment. We never know.
We can only hope.
As of now, Indigo has already said that in Q3 they've cut the guidance. Right? They announced that to the exchanges, that Q3 guidance is going to be cut and there could be some spillover in Q4, but this is all going to hurt the bottom line.
Yeah.
So profitability...
And then there are the pilots, the hiring that has to be, of course, pulled up as well.
So I think we've got a couple of factors out of the way. One is the 10% cut with regard to the total number of flights that they're operating, right? The second factor is...
The 10% cut, I would like to clarify here, is that it is the winter schedule. They were already not operating those many flights.
Absolutely. So that's out of the way. The second factor is now this compensation that they're
refunds that they already paid.
Refunds. Now we got this compensation as well. I think now the only the spot that the street will be looking forward to will be, is there any big penalty that they'll have to pay?
Correct.
Because a couple of these things now, 3 or 4 of factors are already out of the way. The penalty is going to be important.
Penalty will be if the government at all considers.
If at all.
Because cutting their capacity in a market that is already scrambling for capacity will not be a good move, but we never know. But yes, I think financial penalty is the most likely decision.
We need to see what the final says from the Delhi High Court.
All right, and if we require any more clarity, Madhya will be joining in to help us out with that. Thanks a lot, Madhya, for joining in. Well, time to slip into a short break. On the other side, Aman Chavan of our Abacus Asset Management will be joining in to tell us how does he see the market shape.
26 years of CNBC-TV18.
Welcome back. So the market continues to track a fair amount of green, about 0.5% up on the Nifty, and the mid-caps are doing even better. So it's turned out to be a good afternoon. After all, let's go across to Hormaz. He's lined up the list of today's buzzers. Hormaz, what's on your radar?
It's been a while since you found that you were spoiled for choice today in terms of trying to find out movers on the upside in today's session. But a lot of the movers today are not moving on significantly high volumes, but the ones they are include Shakti Pumps. Of course, it's a news flow based move. The stock at one point was up around 16%, still holding on to gains of 14. It snapped an 8-day losing streak today, the biggest single day gain since January of 24. And the volumes are the highest since October of 23, with close to 2 crore shares being traded in today's session. The 20-day average is less than 5 lakh shares, so almost 40x of the 20-day average. The stock, though, despite today's move, remains below its key moving averages. The turnover today almost close to 1,000 crores, which is a third of its free float market cap as well. Stock down 40% so far in 2025, but had gone up 6x in 2024. So keep that in mind for Shakti Pumps. Rico Auto too has snapped a 7-day losing streak today. 15% higher on the stock, the biggest single day gain since Jan. For over 4 crore shares have been traded today. The 20-day average is around 1 crore shares, so 4x, and it's trading above its key moving averages since the 14th of November, so it has sustained above those levels, and the stock is up 40% so far this year, turning out to be the best one since 2022. And the last one on the list, though, is one stock that is possibly the only one that has survived this broader market sell-off in these last 8 to 10 sessions, that is Ramco Systems. Today is the 8th straight day of gains for the stock. The volumes are the highest in the last 2 months. 5.5 lakh shares traded today. The 20-day average is only 64,000 shares, and the stock is above its key moving averages, has gained in 4 out of the last 5 months, and in the last 3 years, the stock is up almost 2.5 times in value, including a 55% up move so far in 2025.
Okay, all right. Hormaz, thank you very much for that. So lots of buzzers as always. With that, let's welcome in Aman Chauhan, fund manager at Abacus Asset Managers, joining us on the show today. Aman, great to have you in, and good to be looking back at a year that was definitely challenging. And we were just having this conversation before you joined in. We had a Rupee guest with us. This whole business of FPI selling, the market being range bound, India being this unloved non-AI market. I mean, is there any sense you have on whether some of this at least starts changing? Either earnings pick up or we get that deal. Something has to change for 26 to be better than 25, right?
Right. I think earnings will pick up. GDP has already picked up and earnings soon will start to pick up, but it's going to be very selective. We are seeing some fatigue in the IPO market. The smaller companies that are getting listed, almost 70-80% of them are now below the IPO price, right? So the supply should also reduce, and the appetite of money which is going towards this market will also reduce, which means more of SIP and domestic flows goes to the secondary market. That should help. I think there's enough liquidity in the market. It's just sentiment that is not great because you have not made money for a long period of time. Once people start to sense that, money will be back in the mid and small cap. Large cap has still done well, and I think that should continue. And the only reason wherever there's earnings growth, those stocks will do well. So there's decent chance that 26 will be much better than 25. The fear of INR depreciation is also going to be behind us. So enough reasons for FIs to relook at India. And that's probably what the case is. Ultimately, people invest in India for growth, whether it is domestic guys, FIs, or whoever it is. So once growth rate picks up, money should be back, and so the market returns. So that's broadly what the call for 26 would be.
That's right, Aman. But getting into this Christmas week, it's not feeling too much like Christmas, right? Last couple of weeks have been harsh, actually, on the broader markets. Stocks falling down 10, 15, 20% as well. And frontline names, the EMS names, the aviation names as well. I think we'll have to keep tracking that, the margin funding book as well, which has ballooned up. Some kind of, cool off from there will actually make the mood much better. Let's see how much pain, though, we have to go through on that front. Aman, let's discuss these couple of sectors that have fallen off the cliff. EMS as well as aviation, you have just one large leader out there. What's your exposure to either of these spaces? Do you all have some exposure?
No, nothing in aviation. EMS would be less than 5%, or even, I think less than even 3%.
All right. And will you look at topping up on these EMS companies after the kind of fall that we've seen?
They are definitely looking good. The issue we had with EMS companies was that they were priced to perfection, right? And hence even a small disappointment meant 30-40% correction, which has happened. For some companies, the EC season was not so good. For some companies, something else happened, right? So now the sector is attractive. There's decent growth in that. I think next year the stock should bounce back, but they're not going back to the old level. They are not going back to the 60-70 Ps that they got. If you get something around 25-30 P, you could ride it up to 40-45 P. That should be the game now in these companies. So we have a small investment. We will look to top it up soon, but with a very clear view that we'll make 20-30-40% return, and that's about it.
So, but risk reward is favorable post this correction that we've seen, right?
Correct.
All right.
The aviation, we don't have a holding, and I think there's a risk of P derating happening there, in spite you being the leader there, because there is now a fear that the government would want to control your market share. They would not like you to go beyond the 60-65% market share that you have, which is not something. You will still grow because the aviation market will grow, but if you are going to grow as much as the industry is, you're not going to get the multiples that you're getting now, and hence not yet looking at the aviation.
Okay, all right. What about the telecom space? For those that have enough of conviction and risk-taking appetite, then the Vodafone Idea is a stock actually that's pulled back from the recent lows. Tricky one, but once it's crossed that 11 rupee mark, I think things will get even more interesting from here on because that supply would be at around 11 rupees. How are you all playing Telecom as a space? You know, you have Jio that's likely to come up with an IPO. Bharti Airtel has done pretty well. And then Vodafone Idea. What's the exposure? Or I don't know whether you'll have it via Industars as well.
Yeah, so in some funds, we have 2-3 telco names. In most of the funds, we have one of the large telcos. Pretty positive on that. We have been holding it since years now, decent returns. We'll held on to it. We don't have the coming IPO. Maybe once the IPO comes in and we know the valuation and when it is coming, we'll have a relook at that. But overall, very positive on the sector. I think earnings growth here will be much higher than what the top line growth will be. There is going to be some, you can say, ARPU gains coming in, and that should bode well. Of late, there has been a supply also coming because promoters have been selling, there have been OFSs also. That should also normalize. So overall, pretty positive. We don't have the third company. It's trade for us, which we don't do in the fund. So maybe, as you mentioned, 10, 11 goes to 12, 13, maybe. I have no clue there, but we don't have any exposure there, nor intend to get into.
Aman, do you have, afternoon, Rima here. Do you have any oil and gas stocks which get negatively impacted on account of rupee depreciation? And if yes, how are you assessing the sharp decline?
No oil and gas exposure at all. And it's been there since many quarters now. No exposure, not looking to add anything in that space right now. It's not just rupee. It's too controlled a sector with very little triggers to look into. So that's the reason, completely off that sector.
Okay, so oil and gas is a pass, too regulated for you. Which sector or theme do you think will give maximum returns in 2026?
Financials is consensus. I believe non-fund based financials can do well because your wealth management companies, AMC companies, broking companies, they all held down. Markets have not been so great. If you are building a scenario where the markets will deliver a 10, 15, 20% return in CY26, then this stocks logically should do well. So that is one segment. Pharma, we are pretty excited. Chemicals is something that is what we are gaining on. Metals, I think, has played out. It's high single-digit exposure in our funds, done well for us. Maybe that rally can continue. I'm not very sure whether it will be in the top three, but financials, pharma, and chemicals would be our top three sectoral bets for now.
And very quickly, ICICI Pru AMC, that opens tomorrow. Have you done any analysis?
Looks good. It will be trading at market cap closer to the HDFC AMC and with a better earnings profile. I think there should be some listing gains. And then post that, then it's going to be normal as to how the market does well. Based on that, the stock should be carrying on. So expecting some listing gains for that name.
Thank you, Aman. Great conversation. ICICI Pru AMC IPO opens tomorrow. Market cap is at 1.07 lakh crore, while HDFC AMC is about 1.17 lakh crore. So pretty similar, but as Aman said, the profitability is more. But Nigel has moved over to the F&O desk to get us the latest trends.
Well, Rima, pretty interesting, space because after a while, actually, at around 3 p.m. when I addressed the F&O markets, we're up close to 100 points. And hopefully in the next 30 minutes, we end somewhere around here. The problem, though, is that on a day-to-day basis, the Nifty is making lower highs and lower lows. And that chart comes up for you on the screen. So from tomorrow onwards, I actually want the Nifty to start making higher highs and higher lows, which has been missing for the last few days. But there are a couple of positives. Case in point being the Indian rupee. That showed some weakness. But the Nifty is more or less stable, holding on to those gains. Remember, in the past, you've seen that the Nifty gets very jittery once the rupee, in fact, slips. But just take a look at that. We're still holding on to those gains even after the rupee did show some weakness. I'll take that as a positive that the market is now coming to terms with the rupee being around this mark, 90, 91 or thereabouts. The other important factor is that you have the Nifty Bank. That's trading above the 20 DMA. And remember, that's the one that's been leading this rally. You wanted to continue to defend the 20 DMA mark. The other factor is that the Nifty is up, the VIX is cooled off as well, and the VIX is at extremely subdued levels. So, that's not telling you that maybe we don't see any big fear coming in there or any big correction that comes in, at least on the headline index. The PCR has moved from around 0.7 to closer to around 1 or thereabouts because the put writers have come back into play. 25,800 put, 25,900 put. Between them, the premium, in fact, is down between 50 to around 60%. So there is some writing that's coming about. Now the bulls will want to defend this 25,700 mark, extremely important, 25,650 turn 25,700, while the 26,100 mark becomes a bit of a resistance zone. A stock that you should keep an eye out on today as well as tomorrow. I think tomorrow as well will be very interesting. Saman Capital, I was looking at the open interest as a percentage of MWPL. It was last at 82%. It needs to come to 79.99%. So some more shedding of open interest, and it possibly comes out of the F&O ban. So that's the one that I'll keep on my radar. Back to you, Rima.
Thank you very much for that. On that note, we will slip into a very short break. We've got about 20 minutes to go to wrap up trade. On the other side, BTST calls coming up with our technical experts.
"26 years of CNBC TV18.
Welcome back. So it's been a good day for the market. Let's take some final trading ideas with Mitesh then. Mitesh, index, let's just revisit the levels to keep in mind now and final calls.
Yeah. So on the index, as I said, 25,950 was the level. We just kind of, reached there, but we haven't gone beyond that. So maybe tomorrow could be the day which could be more decisive in terms of what kind of trend we'll end up with in the near term. But on the stock side, I have a BTST on CAMS. I think, that's that opened lower and then has recovered very well. So a BTST with a stop at 748 on the downside, and possible upside targets would be around 768 or 77. Similar setup on the charts of Dalmia Bharat. So that's a BTST with a stop at 1978 for targets of 2000, 2005.
Okay. All right. Got that, Mitesh. Thanks very much. We'll catch you with the trading action tomorrow. Thank you for all the advice today. With that, let's bring in Amrish Baliga into the conversation. Amrish, good afternoon. Good to have you in. I just wanted to start with a small defense stock that was in focus today, and that is Centum Electronics. Announced a tie-up with another defense manufacturer. Stock's been up 6-7%. I don't know if you've had a look at this company. It's much smaller in the private sector compared to the peers.
Yeah, in fact, it's more into the aerospace, but I've not really tracked it very closely.
Okay.
So it's a bit difficult for me to really comment on this.
No worries. I can throw more stocks at you today because it's that kind of a day, lots of green. So some of these EMS plays, they're all bouncing back, Amrish. When look at Dixon, it's finally up about 5%, some relief on Keynes, etc. What have you made of the whole Keynes, sort of situation? It dragged down the entire sector with it.
Absolutely.
Most of these stocks are 30 to 40% off the peak. What's your call now?
See, if you look at the last 18 months, they were the favorites of the market, and anyone and everyone really got into all these stocks. And we saw these stocks actually becoming multi-baggers. When, something of what happened in Keynes comes out, as far as corporate governance is concerned, it's quite natural that people would get shocked, and they would possibly paint the rest of the sector with the same paint. So I think because of which we saw that major correction across the sector, not just Keynes. But then I think from whatever commentary has come from the management, as well as the way all these stocks have corrected, I think it's a bit overdone. The story still continues. The story is not over just because these stocks have cracked. So I think it's a buying opportunity at this point of time. You need to be a bit careful which ones you pick up. But then, overall, if you're talking about the sector, I think it's a good buying opportunity, especially after the sort of a crack which you have seen.
Okay. All right. Interesting. In the last 1 hour, I think you're the second person, Amrish, who's sounding a little bit more optimistic on this space post the big correction that we have seen. But Amrish, you don't shy away from giving us a stock every time. So I'm not going to hold you back. Tell us what's on your radar this time around.
So the pick is Varun Beverages. One of the largest franchises of PepsiCo globally outside US, and the India footprint is across 26 states, 6 union territories. Nearly 90% of PepsiCo's India volume comes from Varun Beverages. And if you look at the retail touchpoints, about 40 lakh retail touchpoints, they're growing about 10 to 12% every year. And after buying out Bevco of South Africa, they also have an excellent footprint in Africa. Now, if you look at the carbonated soft drinks category, that dominates the show. It's nearly 70% of the total sales volume, but the water category also is around 20%. And now Varun is entering Alcobev, which is alcohol beverages, by partnering with the Carlsberg for the African markets. That may also, finally get extended to Indian markets and the other markets where they are. If you look at the energy drinks, their brand Sting, that has a 90% market share by volume, not by revenue, but by volume. Expected revenue growth is about 20% CAGR over the next 3 years. PAT CAGR is expected to be about 25%. The stock has not done anything much in the last close to 12 months after that steep correction which you saw. But at these levels, I think it's a decent sort of a buy. Looking at the expected EPS of about 12 rupees for calendar year 26, my target price is 612.
Got it. Okay. Bullish on Varun Beverages. Got it. Amrish, stay with us. We'll just slip into a short break. As we do that, let's hear out some comments coming in from Mr. Ramdeo Agarwal, Chairman and co-founder Motilal Oswal Financial Services, who expects India to have a $10 trillion economy in the next 4 to around 5 years. He's also expecting massive growth in discretionary consumption. Let's hear him out.
We have a $5 trillion market. In next 4 to 5 years, less than 5 years, we'll have a $10 trillion market. The way we are managing it in a very disciplined way. Our regulators have been very disciplined, and financial system has been managed very well so far. The journey to 4 to 16 is not going to be without potholes. There will be enough potholes. What will be the name of those potholes? Will it be called COVID? Will it be called demonetization? Will it be called some other geopolitics? We don't know. Every trouble has a different name. GFC happened last time. So there will be some trouble. I guarantee you there will be troubles. Okay, so the potholes will be there. The issue is that 17 years out, we will be 16 trillion economy. So that is what you have to have that faith that yes, this is going to happen. As you go to 3,000, 3,500, 4,000, at 4,000 the biggest thing happens, that is the explosion in the car demand. And that is the Chinese experience. They were about 4 million cars per year in 2007 or 8. And by 2012, when they doubled this thing, now they produce about 25 million cars. So this kind of journey is going to happen in India in a very accelerated fashion. Whole lot of discretionary stuff in consumption. One is, of course, this. And then I think the biggest of all, you can go category-wise, all the discretionary, whether it is a premium food, premium houses, transportation, entertainment, travel, cars. Whole lot of. Then you go to business-wise and company-wise. But the biggest is going to be the savings and investment boom.
"26 years of CNBC TV18.
Welcome back. Well, we are still in conversation with Amrish Paliga, and after a while, we're going to go home with good solid gains, 150 points up, feeling pumped up, but that's not the game. The game is really in the broader markets. We have more number of stocks advancing than declining. Portfolios are feeling good, guys. Hang in there. Don't throw in the towel. Let's get in Amrish. Amrish, I want to ask you about Trent. A stock that people loved at 8,000 rupees, 8,500 rupees. You're getting it at around 4,000 rupees. Another one of those stocks that just ran away. Street was focused on growth. Multiple just got re-rated. At 4,000, you're interested or no?
No, I would still wait a while longer. I need to see consistently the same store sales growth, holding up. So I think I would wait for that. So I won't mind buying it expensive, slightly more expensive than where we are, but I need to have this data point in place.
Okay, staying away from that one. What about Tisco? Tata Steel is up 2.5%. They're talking about, expanding capacity in India. The street was getting a little bit cautious that the others are expanding big time. What about Tata Steel? That used to be the largest steel company in India. So that problem is addressed. The joker in the pack is going to be the debt. It's going to be a very large number. Tomorrow or the next few days, the stock could be under pressure. But let's wait by for that. For the time being, the street likes it. Do you like it?
I also like Tata Steel, and I think the debt issue, can be sorted out because, you have every other company coming up and raising funds. So I don't think Tata Steel can be any different if it's required. So, at these levels, I don't see too much of a downside, although we have seen, it moving up decently well, at least, today and yesterday. So the sort of a target price which I have for Tata Steel is about 240, but that may not come immediately. It may take about 6 to 7 months.
All right, we'll be waiting by to hear whether or not that safeguard duty will actually see the light of day. When I had a chat with the steel secretary, he said, we'll get a decision soon. Didn't define what is soon, but let's hope we hear something on that front. Thanks, Amrish, for giving us a view on a couple of those stocks. Let's wind down the markets for you, though. It was a good day of trade. The markets bounced up 130 points. The problem is we made a lower low and a lower high. But yet, a good trading session. Eternal was the top stock from the Nifty, was up 2.5%. Adani Enterprises as well, up 2.8%. So good going out there. And Jio Financial Services, that's seen a big correction from the peak. That popped up in trade. Tata Steel is addressing the growth issues here in India. It's talking about pulling back market share as well. Street liked it. From the banking pack, Kotak Mahindra Bank was a relative outperformer, up close to around 2%. What didn't do too well then? Asian Paints came in for some profit taking. SBI Life as well was down close to around 1%. But from the broader markets, plenty of stocks did well. Rico Auto up 15%. Shakti Pumps, very strong today. That was up more than 10%. Ola Electric, stock half from the recent peak. That one was up close to around 6%. And surprise, surprise, Vodafone Idea, that as well goes home with a gain of more than 5%. And crucially, it ends at the high point of the day, conquering that 11 rupee mark. The EMS stocks have been all over the place, but you had Keynes, Dixon Technology, both of them fought back. Sambadana Motherson as well, up close to around 3%. So those were all the top gainers. On the flip side, RK Developers, I recall the stock coming out with an IPO. That was down 10%. Prime Focus was down 5%. You have Tata Motors CV continues to struggle. That is well down close to around 2%. But on and on, the bulls will feel good on this Thursday that they at least got some green and the broader markets did outperform. So the session goes to the bulls after a while. Well, on that note, though, we'll wrap up on this edition of Closing Bell. You stay with us. Markets Forward comes up next.